folks, listen. You can sit down and listen to these videos I'm producing and come in with a preconceived notion that everything I'm saying is nonsense, it's not true, and it's not valid because you don't want it to be. All I'm asking you to do is put everything you think you understand, put it aside for a moment, just for a little while, and go in and do the things I'm telling you to do. I guarantee you will absolutely fall in love with this, because this is consistency. This is consistency that you have always hoped for, but everything else just falls short in delivering it.
Okay, folks, welcome back. This is our midweek review for the ICT Mentorship, November 27th, 2019. Just as a reminder, we started processing payments last night and then have been processing them all throughout today. We will be processing until 7 o'clock tonight, and then we will not be resuming until we won't be returning to processing payments until Friday morning at 5 a.m. my time. Okay, we're going to observe the Thanksgiving holiday tomorrow, but those individuals that have made their payment earlier, prior to today, they will all be processed, assuming their payments were made correctly and the notes were accurate that was sent with it. But if you make a payment tonight or later this evening, it may not get touched until Friday morning, afternoon, that time period. And then we'll obviously continue on a regular every day working on it until 5:30, 6 o'clock in the evening time. So if you're new and you're wondering if your payment's not been processed yet, if you paid, if it's correct, we are in the process of working through them. This is a lot of you folks, and we have to do it on a one-by-one basis. Okay. All right. So the dollar index, we are looking at the daily chart here. This old high, as I've been referring to at length last couple of weeks, I mentioned with these multiple attempts to go higher with relative equal highs, got real close to it today. Got real close to running these equal highs, but we made an attempt to get above today, this old high here at 98.37. And when we drop down to an hourly chart, you'll see what it looks like there as well. So we have Wednesday's trading, Tuesday, Monday. It's this holiday volume. And I said if we do run higher, it needs to go through this fair value gap before I change my stance on. I expect basically a weaker dollar still. I'm sticking to the tools. I'm sticking to my experience. And admittedly, this should have had no problem whatsoever today running through here and trying to make a run. And it could probably still do it. It's 2 minutes to 2 o'clock. It's 1:57 p.m. now, my look in the East Coast time zone. And if we drop into an hourly, okay, so here's the hourly chart on the dollar index. We had, this is that old daily high. So we had 1 here, 2 here, 3 here, 1 above a little bit in here. So is it going to use this as support and expand higher? We'll see. I don't know. Right in here with fair value gap, sell side liquidity resting below relative equal lows. I like that. And we still have the very large pocket of liquidity resting below here. It's going to have to really convince me. And since it's a holiday week, I still probably won't be all that convinced if we even run up into that fair value gap on the daily chart. I'm not trading. I'm not looking for participation. I'm counseling you all to do the same thing. Use some patience. And I know it's hard, especially if you've broken the rules and traded with live funds here and you hurt yourself. Don't try to get that money back before the end of the year. Okay, just sit on your hands and wait. I know it's not fun, but that's the skill set you have to learn as a trader. You have to learn to sit still, and even when it's not comfortable to do so. All right. So if we go back out to a daily, and zoom back in here for a moment. All right, so we did not run the buy side liquidity pool resting above these equal highs yet, and the only thing of importance above that is the fair value gap here. I don't think, personally, if it goes up to here and trades to it and goes through it, that it's bearish for dollar. It's bearish for dollar as long as we're below this fair value gap. So I'm allowing for a run above these relative equal highs and then a rejection. That would be fine. That would be something that would be reasonable. I was expecting to see not this much of a retracement, but we're in a large consolidation, so it could still whip above this equal high and then drift lower to run the sell side liquidity and then run back and forth in here and eventually run here and then still not break down for this low or go higher. The dollar is just stuck right now. It's very, very frustrating for me as a teacher because I want to show you more than what the market's willing to give at the moment, but we have to submit to it, and it's not fun, it's not exciting, but it's proper. So you gotta go through it. So that's the business there. Nothing really to speak of except for watching how we react. If we get above these equal highs, we want to see some measure of retracement and reject. Otherwise, if it expands, focus your attention in the fair value gap. All right, so euro dollar. This is going to be a real easy discussion when we get here because it's really done hardly nothing. So here's euro dollar. We didn't even run the sell side liquidity pool yet there either. Really small consolidation week. I'd like to see it go below these equal lows and then reject and make a hard aggressive run right into this fair value gap, and then that would build up momentum for a buy side liquidity pool raid here. Any momentum above that would take us over here, but it's, you know, apart from these equal lows and the liquidity below that, if we get down to 109.60, yeah, 109.60, that's probably a fair statement that I'm wrong, and this low is not going to stay the low for the year. But whipping below these equal lows here for the sell side liquidity and then rejection higher, that would be a nice run for the buy side liquidity pool here. On the hourly chart for euro dollar, not a whole lot to speak of here. The last real nice setup was over here. So you had a little bit of a fair value gap in here. It wicked up into that bearish order block. We already talked about that. And it just seems like it's stair-stepping lower, and here's that sell side liquidity pool from the daily at 109.90, so it may want to seek liquidity below that. I'd like to see it tap it and send it higher and send the dollar lower as a result. All right, so here's cable, and this is our daily chart, and we have not come out of this dealing range here. I like the fact that we went below these lows here, and we had a hard drive on this single candle, and that's nice because it gave the impression that it was going to break down, even though I was looking for the likelihood of 128.20 to be tapped. I mentioned that on Twitter. It only got down to 23, I think it was, on this day. Yeah, 23, 128.23 and 8 pipettes, and then has since retraced. We had a little bit of an attempt to go lower today and then gave all that loss back and moved to a high close. So do we close high on the day? That would be bullish, and we would expect, I would personally expect to see the British pound to make a run for that 130 big figure, clean up any buy side liquidity that would be resting above here. Still think that it's likely to take these equal highs over here by Christmas. That's I mentioned that a couple weeks ago. I still hold to that idea. It's held its market structure in here really nice. This might be one of those instances where retail bull flags, to some degree, work. I don't think it's going to be a low to high as the flagpole is traditionally taught in technical analysis. I like the idea of this low to this high and then seeing it run up, because then it would match, and I'll outline it in a second, but it will match the run to here. So let me just put this on here and you'll see what I mean by that. So here's the relative equal highs. So I think the buy side liquidity right above here is the Christmas target or year-end target for GBP. And then if we look at this idea that I was outlining, here is the measured move idea I'm looking at. Okay, so we have this, and then I'm going to clone it. And I'm going to add it to the low. If this low stays intact right there, so we have the low to high, we're consolidating. This is the low I think should hold. And the reason why I say that is because of market structure. We have a higher low to the left of it, a higher low to the right of it. We have short-term momentum on our favor, bullish. And if it does this measured move idea, it does just exactly what I would like to see, a run above these equal highs. And that's what that move here is. Okay, now how do we know that this is going to pan out? We don't know that, okay, but it's likely to based on what I'm outlining here. If we lose the low formed on this candle here, if we go back below 23, then this is probably wrong. And all of this, even though it's balanced on the daily, it may need to do some deeper retracement, which at this point wouldn't make any sense to me technically. It's just a ton of liquidity resting above here. That people that wanted to fade this, okay, and everybody that wants to fade the GBP and they want to short it, I just think they're going to get punished. I think they're going to get punished, and it could be very painful. It might be aggressive, it may be relentless, and I may not be timed in actually long when it happens, but I certainly don't want to short it and go against that. And again, this is the objective. That would be the likely upside. Hourly, we have really, again, just a consolidated market, really clear, obvious buy side liquidity pool resting around that 129.80 level, above this high here, which is 85. So we can look for continuation if we get the close high today. In other words, if we close up here and don't give up the ghost and go lower, I want to see this fair value gap stay open. That would be a breakaway gap. Because we did a fair value gap here that was traded back down into and then advanced higher. So I want to see this one stay open. That would be nice. It's a breakaway gap. And then this retracement here, back to the fair value gap and expanding higher. We ran into the buy side liquidity pool here. We have another existing one here and a SIBI, sell side imbalance, buy side inefficiency. We want to see this get taken out quickly. We don't want to see any of this trading up to and then respecting it, hard crashing. We don't want to see that. Institutional order flow. We want to see premium arrays give way and bullish arrays provide support and new buys. That's what we would be looking for the hourly chart and daily chart for GBP. Okay, I still think that those daily equal highs are the go-to for 2019 for pound. And until I see the opposite, which is 128.23 taken out, this low here. Where is it at? Come on. Yeah, 23.8. 128.23 and 8 pipettes. If we lose these lows here, then I'm not sure where it wants to reach on the daily chart. It will have beaten me rather convincingly. Okay, so let's go over to our teaching portion. I gave you homework on the 23rd of November. Let's go over that lesson now. Okay, folks, we're looking at the homework assignment I gave you on November 23rd, 2019. This was the post I made to the forum, and I gave you all a chart to study here. And this is the yearly or year to date for 2019 for the GBP USD, or as we call it, cable. And I asked to look for the similarities, similar characteristics, study the relationship that what you see here that could be seen also in the hourly chart on a individual day. I elected to use October 24th, 2019 because it really helps communicate the point of the lesson here. And I'm going to go back to this chart. Now, think of every individual month as one hourly candle. the beginning of the year, cycling back to the beginning of the following year or new year. So there's 12 months in a calendar year, and I gave you a time window between midnight New York to noon New York. So that's 12 hours of time. I want you to think about the relationships of the intraday or the daily profile that makes the range. It's the high, the low, where it opens and where it closes, the daily candle. And think about that daily range in the form of midnight New York to noon New York. Now, obviously, we have true day. We have other things, Asian range. We have New York close, all of those things. But I just want you to focus on the relationships that are very similar to that of midnight New York to noon New York time, typically. And what do I mean by that? Well, generally, there is some consolidation, some waiting period to get to the European and London Open. There is a trending profile that takes place between the London session and the New York session's lunchtime. Then it goes back into some form of consolidation again. That same effect is seen in the yearly. So if we look at price action over the span of one full calendar year, it's not hard to see the benefits of understanding the seasonal impacts that come in spring and also in fall. But there is a built-in, very generic trending environment that allows for trending profiles to really materialize between May and September. Now, because seasonal influences are not a science, it's not a perfect binary thing where it's every single day of this particular calendar year that wheat is going to be bullish or bearish. It's not that specific. So you have to, allow for some early and sometimes lateness when it comes to seasonal influences. So if we know that price is fractal, price also has an algorithm that it follows, it's not limited to the things that I taught in intraday. So while those things are very generic and they do repeat themselves many times in intraday capacity, the same elements and signatures are seen also on a yearly time span. So obviously each one of these individual candles represents one day of the fluctuations in GBP USD. The vertical lines are delineating the calendar months. Okay, so we have the beginning of June to the beginning of July 2019. So between these two vertical lines denotes the monthly range, the high and the low, but comprised of individual daily candles. Think about these individual daily candles. Okay, if we blended it into a single monthly candle, the month low would be here and the month high would be here, and where it opens is over here and where it closes is over here. Okay, so think about it in terms of an hourly chart. Okay, we have the Asian session that leads to the midnight turning point or beginning of the clock, if you will, for IPTA, and then we wait for European and London Open. Then it creates some kind of a trending move, and it trades that way generally into the lunchtime hour in New York. Okay, so that you have the effects of London close and New York lunch. About 75% of the time, the daily range is capped by noon. Now, it can go a little bit later because of FOMC, some other later afternoon event, or it could be some geopolitical event that wasn't really announced. It just so happens that we had a war breakout, an attack happen. Anything of that nature could promote something that goes beyond typically the noon hour. Majority of the time, I'm looking for the daily range to cap its high or low between 10 o'clock and 11 a.m. Me personally, that's what I'm looking for, New York time. So I won't always get the actual highest high, and I've already taught ad nauseum that it's not necessary. Okay, so because of that characteristic that exists in the intraday, one of the things I did early on in my studies back in the 90s is to look for periods of time in the year where certain events would lead to certain environments. Okay, so in other words, I want to match a market profile with a specific environment where I have a lot of advantage because of seasonality, because of historical references that proves it exists, and also knowing back then I was learning the signatures that Ict provides us, where we can look for these certain things to occur repeatedly in price action. And if we don't see those signatures, or if we see them and they start failing on both sides of the spectrum, bullish or bearish, it really communicates an environment that is not conducive to low risk. So it allows us to take a step back, not be so forceful or try to impose our will in the marketplace. Just submit to it and say, okay, now's not the time. I'll wait for more information. Now, it takes a great deal of self-control and discipline to do that, especially when you're new, because it goes against and flies in the face of what you are here to do, which is learn how to analyze the markets and predict future price action moves. So it's a major tenet to your longevity to master this skill set, to know when not to do anything and not when to press your luck when the markets are it's just not likely to occur. Now, there's going to be times when moves will occur and you felt like you should have been sidelined, and then you'll have that, oh, I missed out on that move. The longer you do this, the less you're going to feel that impulse or that feeling of you missed something. I've seen so many things happen over 27 years. You don't miss it. You really don't miss it, because there's something always new on the horizon, and it's better to focus there instead of looking in the rearview mirror, because if you're going forward, it makes no sense to focus on where you came from if your sights are set forward on a goal that you have yet to reach. So you can't be beating yourself up about moves that already transpired. You need to focus on the next one. Otherwise, you'll miss that as well. And that is really frustrating. So when we look at the calendar year like this, okay, I want you to think about these individual daily candles formed into a monthly range. Now, obviously, I could have did a monthly chart of the GBP, but I wanted you to see the ebb and flow of how this market has moved year to date. Now, obviously, we still have the last few days of this week, which makes November, and then we have the whole month of December. So what do I want you to take away from this lesson? Well, let's go into the hourly chart down here for October 24. So this is midnight, and we see it running up into a Judas swing where we have a reversal and then expansion lower. Then there's a retracement. Then we have the New York session, price run, and creating the low of the day at noon. Now, that's the only reason why I picked this particular day, because it ends the day capping the daily low on the noon hour. Okay, otherwise it could have been just any other candle. Not every single day is going to pan out like this. Some days you'll have a up move, it drops down, and it drops down into New York session, and then creates a market reversal and goes the other direction. Okay, so there's always risk, there's always uncertainty that we have to work within uncertainty all the time. And it's one of those factors that separates those that are capable of doing this and those that are not. The uncertainty and welcoming the uncertainty is a very hard trait for people to have or develop as a trader, and those that can't do that don't generally survive in this industry. They get initial luck, or they'll have eventually a period of luck, and it convinces them into believing they're a trader, and then it returns back to conditions like we have right now, where both sides of the spectrum, bullish or bearish, could be argued. And then we also incorporate the time of the year where it's just simply not favorable for very large explosive price moves to pan out. So what am I saying here? All right, so think about that yearly pattern in the form of hourly candles. Okay, so there's periods of the year where we anticipate consolidation or potential reversals. And then between May and September, or very close to that, we anticipate the largest trend portion of the yearly moves to form in those months. Now, that again, that's not to say that we don't get large moves in the fall or large moves in the beginning of the year leading up into May. It just means that the profile, the market environment between May and September is very supportive generally, from a generic standpoint. It's typically a trending environment. So market moves tend to stay in one direction between those months. Now, you're going to go through your charts and you're going to see there's a couple of years where it didn't do that, and you're going to feel the impulse to send me an email and say, why didn't it do this and why didn't it do that? These are perfect case studies for you to study, because there's a lot of revelation from doing those things, because that's how I found this stuff out myself. Yes, there's a large dominant cycle that more or less repeats more often than not, that May to September, okay, those months are generally trending in nature. The times that it's not is when we're at either a very large crossroads on a weekly time frame or a monthly time frame where a trend is pausing or potentially reversing. And then you have to wait for the other end of the trending period, which is around the fall months, for a new leg in price, or a new market leg, higher or lower, or potential breakout of some kind occurs, and the market starts a new trending model. Okay, or it may resume an old trending model that has stayed in a very long consolidation. So let's go over to GBP, and I want you to look at this yearly chart. Well, it's not a yearly chart, but it's the daily candles over year to date for 2019. And you can see between January 2019 and May 2019, that's the beginning of the year. And typically these are going to be consolidation and or reversal market profiles. Between May and September, now again, it's not locked to the first day of the month. Okay, I'm just giving you a general principle that I live by as an analyst. These are the things I look for. There's trending profiles very easily identified between May and September. And then between September and the new year starting, we are classically in another consolidation to potentially reversal market profiles. Again, if we have a very strong long-term macro trend, the fall months can be utilized to get in sync with that, or altogether reverse. If we do not do one or the other, then generally we'll stay in a very large consolidation. Same thing is said between January and May. When we see January to May in consolidation, as we've seen this year we're in now, 2019, it leads to really nice trending profiles between the spring highs, the fall lows. And we've seen a lot of that here, even in a pair that was very difficult this year, admittedly on my part. I already said this, multiple mediums, either through Twitter or through the mentorship. It's been difficult. It's been a very hard year. And that does not mean unprofitable. This means that it took a lot more effort on my part to cherry pick where I wanted to participate and most of the time not engage. And that may have impacted your learning here in terms of what you're hoping to see this year in terms of participation. But I believe, looking at it as a mentor and as someone that's been doing this for a very long time, I couldn't have asked for a better environment to train in, because these environments, they're not very frequent, but when they do form, it creates chaos in traders. So knowing when the year is likely to perform a specific way This is how I internalize it. Now, again, this is the daily candles over the spectrum of year to date. So we still have a little bit left for December and then going into the new year. But I want you to look at how the market basically stayed in large consolidation. Yes, we had price runs from here to here, but you're going to have to drop down into 4-hour to 1-hour charts to see that. I'm talking from a very long-term macro, because generally I'm not usually speaking on this type of time horizon because it doesn't fit my tastes, and also the market hasn't been really supportive of it. Now, we were looking for all these types of moves, and we actually had ideas about reaching down into September, creating a low. Go back and watch all the archives and you'll see all those things mentioned in the video or videos. But the point is, just like the daily range may end and create the low down here and then consolidate going into a new setup for the following Asia session, if this was intraday price action on an hourly basis. In other words, if I was to say that this would represent midnight and this would represent noon, all this price action in here would be basically Asian range. Then you have a little bit of a move up, Judas swing, and then the trending model somewhere in here would be the New York setup. Again, this is assuming we were looking at an hourly chart, so I know I may be confusing you, but I want you to understand the same things that I look at from a profile, whether I'm looking at a long-term daily perspective using a daily chart like this, or if I'm using a hourly chart looking at the daily range and how it's forming. It's the same. It's the same characteristics. It's the same thing. So that's why I don't get terribly bullish or bearish, once the moves have been, long in the tooth like this. It's been doing it for a long time. I don't get that crazy about continuation once we get into the fall. I anticipate some measure of consolidation and then potentially a reversal. Those ideas will serve you well if you stick to them, but there's going to be times where you have to break the rules because of the market dictating that. And Brexit this year was one of them, which was all of this. Okay, all of this right here is Brexit. And if this was a long-term primary bull market, okay, we would have probably seen a consolidation in the beginning of the year, and then a trending model, and then a retracement down into like October, November, and then another new buy would set up for the British pound. But because we are in an existing downtrend and a primary long-term trend that's bullish on dollar, everything's reversed. So everything's more weaker for GBP. And the only hope and grace that this pair has had was the good news that was brought in by the likely vote and acceptance of some deal that allowed the Brexit to manifest. So if we look at October 24th, and let's do that now. So it takes us back to that initial run up, creating a Judas swing. So as we're waiting for a new expansion to get consolidation to reversal, we see that here intraday. And then we have the price run in London, the retracement in New York, and then the trending between occurs from midnight and noon the following day. And this shouldn't be there. It should be on that candle, sorry. So we have this 12-hour cycle that is very indicative of signatures, of algorithmic trading. It's something that if you don't study on your own and go into the charts and look at individual markets, not just Forex pairs, look at everything. Look at oil, look at gold, look at commodities that trade like the bond markets, the index futures. These markets have this characteristic, and it's a very generic long-term macro cycle that has a large percentage of panning out, but it's not a high 100%. It's very high in terms of probability. But when you factor in other things like intermarket analysis, where you look at other markets where it supports or negates the ideas that you're looking for in your particular pair or market asset class, when you have all of those things come together and you get, say in your repertoire you have 4 or 5 things that you like to look for, and you get 3 of them agreeing, well, you probably have a trade there, but I wouldn't risk a lot of money on that. But if you have 4, then I would risk your normal percentage of your account. If you have 5 of the things you like looking for, okay, and what do I mean by 5 things or 3 things? Say you like looking at the COT hedging program, okay, that I teach in the mentorship. And the commercials are in a net long position. We're in a seasonal tendency that's bullish. Market structure is bullish, and institutional order flow is bullish, and it's in the strongest time of the year where the likelihood of the seasonal tendency, even though the seasonal tendency may be in play, but we're really in a month where it really outperforms a specific one-sided direction. That means you have 5 things that you look for filters for a trade. That is where, me personally, I would use my maximum leverage and my maximum risk exposure, which personally is 3.5%. So if you do things like this and you look at price from a long-term macro and you break it down to the lower time frames with that same mindset, it's like a business cycle that repeats over and over and over again in price action. Sometimes it shifts in and out, but generally it'll come back. And this year, you can see a lot of the effects of that, but it was really broken in some ways with the Brexit, because otherwise we would have had probably a really lethargic consolidation and then maybe another continuation lower on GBP. But because of the Brexit, it allowed for that knee-jerk reaction to the likelihood of a vote being approved for some plan of going forward that's supposed to happen in January 2020. I'll build on this theory and give you more meat to flesh on this skeleton of an idea. It's not new. I've mentioned this in other discussions, maybe not in the same way I've done it here, but I really want you to think about how and why we do the things we do in the mentorship and why I think the way I think, because it's based on this theory, okay, and how the markets move, what type of profiles are likely to occur. And this lesson is going to be really beneficial to the folks that are in the month, and I don't recall which one it is. If I'm not mistaken, I think it's where we do weekly profiles. So it might be short-term trading. I think it's what it's going to be, short-term trading. Whatever month that is, off the top of my head, I can't remember what it is. But that particular month content, I teach you weekly profiles, and those weekly profiles are going to be very useful to you with this study. Okay, so you'll know which ones are most likely to occur, because I get a lot of emails from folks that are in that month or just recently finished that month, and they're thinking back, like, I can see it after it happens, but sometimes you talk about it before it happens and it pans out just like you said. How do you do that? It's based on what I just taught you here. Okay, and I'm taking pieces of things that would normally perform very well, and I'm putting them in the right environment. So it's like, you don't want to carry an umbrella when it's going to be sunny. Well, maybe you do if you're a lady and you want to keep the sun off you. It used to be like that in the old days in the U.S. And good weather, you don't want to be lugging around an umbrella, okay? But you certainly want an umbrella in the days that's most likely going to rain, or look out the window and it is raining. So it's more appropriate to reach for the umbrella when it's raining or calling for rain. Well, I'm not going to call on specific market profiles, okay, unless the environment is supportive of that and I have other things leading up to it. So I can go into the mentorship content and pick one thing and go into every single market day and justify a reason to get into the marketplace, but that's not high probability. And some of you do those things and you get upset thinking you figured it out because you had one piece, and then when it doesn't hold up, you think the whole thing falls apart. And there's a lot of timing and condition that is required, and that's what this lesson has been touching on, because it's certain times of the year, certain things are likely to occur. Reversals and consolidations really form predominantly in the fall months and in prior to spring. So between spring to fall, there's generally a lot of trending market profiles. And so when we look at market profiles and weekly profiles in the short term, taught on one shot, one kill, you'll see why that those types of environments are very easy for me to call before it happens. But when we enter these particular months, and also add to it that we've had a really sideways market. I mean, if we went through all of the other markets like gold's in a large consolidation, has been doing it for months. Oil has been in a large consolidation for months. Canadian dollar has been in a large consolidation for months. Dollar's been in a large consolidation for months. And the only thing that has really moved with a lot of energy was GBP. And again, that's because of Brexit. So if you've taken the Brexit completely out of it, GBP probably would have been stagnant just like the euro dollar has been. Okay, so hopefully you can see where I'm trying to lead you to with this lesson. It's to help calm you down and pace yourself in terms of looking at your calendar, projecting ahead what time of the year you're going to be doing certain things, and then looking for your tools to perform for you in specific times of the year, and not so much relying on them to do things for you in the times when it's not likely to perform very well for you. And when you get to the weekly profiles lessons in that content month, it'll mean more to you, because there's certain market profiles, like for instance, just the one I taught for free, and everybody knows about it on the internet now. They're making videos calling it the market maker pattern, the master market maker pattern, or whatever it is they're calling it now. And on YouTube, there's a YouTube channel out there that's basically pirating everything I said and renaming all kinds of stuff. But anyway, the one I taught was generally it's the Tuesday low of the week, high of the week, depending on if it's bullish or bearish. And that weekly profile is low of the week Tuesday or high of the week Tuesday, and Thursday New York Open generally making the opposite end of the weekly range. So if Tuesday makes a low of the week, if you're expecting rather a bullish market profile, and you think that the market's going to go higher this week, we wait for Monday to consolidate or start to drop lower, and then Tuesday create the low of the week. 70% of the time it's going to occur between 2 o'clock and 4 o'clock in the morning New York time. Then it goes into a trending model, and we can look at this here and think of this as Tuesday, sometime in Tuesday Tuesday London Open, and then this might be Wednesday sometime, and then continuation, and here's Thursday's New York Open sometime. Okay, so that's the general pattern if we were looking for Tuesday high of the week. But this is obviously a 1 hour chart, but I'm showing you conceptually how I internalize price action relative to time frame. So it's confusing only if you look at this little 1H, because you know the chart is a 1 hour chart. But I look for these signatures to occur on every time frame based on what I taught you in this lesson here. So if we're looking at it from a yearly perspective, okay, there's certain things that I'm looking for, as I described in this video. And when you're anticipating specific things that are bullish, in bullish times of the year when the seasonal tendencies are calling for it, market structure and institutional order flow is supporting bullish price action, then you have multiple things going for you, and then it's very easy to label the market environment as very high probability, low risk. It doesn't mean there's zero risk. There's always going to be risk. But those are the times in the marketplace where I'm excelling and I am like on it. Like there's very, very little drawdown in my trades, and it's a lot of energy moving in the direction of my called price moves. So that's the secret. That's the science behind what I sit on my hands and wait for, because a lot of you have emailed me, how do I wait for this and what am I looking for? That's what this mentorship is. In last week's video, I said that if you and I were sitting in a restaurant, we met for the first time, and you asked me what I did, I watch the price of currencies go up and down, and I predict the fluctuations, whether it be going higher or lower. And the natural look is their eyes kind of like bug out and they twist their nose up and corner of their mouth tighten up, and they're thinking, what did he just say to me? What is he talking about? And I'll just say, like I said in the last video, it's like stocks. Just think of it like stocks, but instead of the stock of a company, it's the actual currency of a country. So I'm focusing on the fluctuations of the buying and selling of currency. So what is it, if you and I were just meeting and you've never introduced yourself to speculation or trading, what is it that I would tell you I would be doing? Like, how do I communicate what it is I do? I would basically just go over what I just showed you here. I'd say, here's a chart, and this is what usually happens throughout the year. And you understand more because you're a student of mine, but they will think, well, yeah, that's complicated, and it went right over my head, and they'll discard it and probably think to themselves, I wish I never would have asked about it. But you, as someone that has an affinity for it because you're pursuing an understanding in this industry, it's more meaningful to you, and light bulbs are coming on in your mind when I talk about it because you know other things that support this lesson. If you're new, you probably don't have those supportive resources at your disposal because you haven't gotten that far in the mentorship. But there's a lot of these things that by themselves won't feel like an epiphany. It won't feel like you've climbed a new plateau in your understanding. It's going to create a whole lot of new questions, and that's good. Some of you, this helped you settle down and say, okay, I know what he means by certain market profiles work really well in specific conditions and times of the year. And when I blend these certain things, then it's high probability. If I have 3 or less, it's not high probability. It's likely that the move will happen. But if I have 4 things going for me that's supportive of an idea that I like in terms of price action, then I'll risk my normal amount. But if I have 5 of the things I'm looking for, 5 signatures, 5 supporting evidences that I believe that price is going to go higher, I'm in there with 3.5%. And that's the only time I will do 3.5%. So if I'm in a trading contest, obviously it's 5%. Okay, but I would demand 5 of the filters I would use, and I'm assuming if I have 5 filters, I have more than that personally, but you can do really well having 5, and I just named 5 of them in this video. And if you have paid attention, you wrote those things down, and you look at all your setups and go through those processes. If the things that I said don't jive or are supported in price action, or the move you're anticipating, you're probably not going to see it pan out. Okay? So hopefully you got something out of this, and until I talk to you next week, I wish you good luck and good trading.